Aloha everyone, Joshua Hayes at BigWaveTrading.com. Pretty good session on Monday. To be honest, this is kind of how I wanted it. A strong overall session, but not too strong, kind of quiet by the wayside. I actually wouldn't mind if we trade flat for the rest of the week, preferably next week too, kind of chop around, move sideways, and just hopefully none of our new long signals fail. So far, so good. Success. A lot of new long positions on Monday. None immediately failed right out the gate, and the vast majority finished higher. So on a pretty flat market day, that's good. But really quick, let's review the indexes. The NASDAQ, as you can see, minor up day. Look at that volume. Oh boy, it's hard to get too excited. It's hard to really have any conviction when to push harder. The good news is NASDAQ 100 pulled back on lighter volume. So that is at least semi good. You can see the QQQ did the same thing. IWN, Russell 2000, it was higher, but once again, no volume, but still price is all that matters. So that's all that I will continue to follow. S&P 500, more new highs. Where's the volume? Where's the beef? New York Stock Exchange, same thing. SPY, same thing. DIA, same thing. It's almost comical at this point. It's very, very, very comical. When the volume returns, man, if it ever returns to the upside, boy, if we can just hold on for the, next month and a half, that'd be really, really, really impressive. But speaking of holding on, one area that's not holding on, and it's just straight up strong, and it's very, very good, that New York Stock Exchange advanced decline line. I talked about it this weekend, how it V-shaped right to new all-time highs. Excellent follow-through today, confirming the strength in my individual end-of-day trend following portfolio and new long positions with them not failing. That NYC advanced decline line, I believe, still is our leader and not our laggard, and is telling a tale of a market that wants to break out to new highs. And as you can see here, this index is hitting new highs before the S&P 500. Hopefully that's a good sign. Now to the intraday stops. Obviously, no surprise, there were a ton of them thanks to those new long signals. But if we, let me go ahead and see if I can't open this up just to show you that this one finally went bye-bye. Okay, yeah, that's good. The time doesn't really matter for you guys anyway. But as you can see, a lot of the limit orders filled. A few did not. Ruth didn't fill. Type didn't fill. And the UUU, spec UUU, because I have UUUU, but the U to the third power did not trigger either intraday. So UUU, Type, and Ruth split each day 10%, less shares than the day before until there's no more. For instance, Band, I'm down to trying to acquire my final 10 shares tomorrow. If it doesn't fill, Band is gone, for instance. But as you can see, a lot of limit orders filled. Now on the flip side, look at the sell stops. You will notice here, the last half of my SPY put position hit my 50% emergency sell stop. That is worst case scenario, and it's actually best case scenario for all my long positions. But I never ever am willing to ever lose more than 50% on an option trade, and this is what I consider a complete disaster. That's if everything goes wrong. I was hoping to get out. Already was out half of it well before. I think the first half I got out with right around like a 25% loss. Always okay with options, considering I'm always looking at 100% plus gains. Remember, I first start taking my first profit limit at 100% gain, the second one at 200%, unless it's just intraday just making me a ton of money, then I let it ride. But on an end of day basis, 100%, 200% is where I always take profits. But SPY hit that emergency. But besides that, hedge. Then there was finally a stock, but hedge. And then as the session went along, more stops, but profits. Sell, small losses, profits, small losses, profit. That was like a quick little flash crash. I had some very tight stops, and I had 3 very tight, and it ripped through all 3 of them on MHH. But as you can see, very orderly session, which then leads us to the end of day sell signals. SDOW, as you saw with my intraday stop, that is 100% full sell signal. It's closing below this low a day right here, so a new 52-week closing low, final sell signal on SDOW. And then the only other full sell signal, Soda. Now, unfortunately, I got down to only 1 share from my long position initially here which unfortunately was reduced slightly because of that earnings was coming up within 3 or 4 days. So it was a limited position to begin with. Unfortunately, gave a lot of 50% sell signals, hit trailing profit stops along the way higher, which then had me with only one share left. And when it went below this May low here, I was not completely out. But being bought out by Pepsi today, 100% cash. So if you are still long soda, that's it. It's not moving anymore. Just like any other time a stock gets bought out, all cash. That's it. It's done. No more. Get out. So you can sell your soda here. It's done. I believe that would be a 447% gain from the initial long position. So not too bad. And then only two 50%ers, SRTY, closing below these recent lows since the pocket pivot point. I'm not sure which day is the lowest of the lows, but I'm sure it's somewhere in here. So that's a 50% sell signal. And then MHH, just like I just showed you with my intraday stops, hitting through. I think I had one here, and then I must have had one here. So 1, 2, 3. Very, very, very close on all of them. 50% end of day sell signal. What I have left, 50% goes to here. And then I don't know where the rest of my stops are, but I'm pretty sure it's like here, and then maybe one more here. So that's that for the sell signals. New long positions, there's actually quite a few. Nothing too extremely exciting whatsoever. I guess the best new long position, because it came in the most scans, is UMRX. That being said, it's a biotech stock, still risky, but it is an IPO quality stock. I mean, obviously new issue. It was in my price volume BOP surge scan, and it's in my green BOP for the past 20-day scan. So technically that makes it a 2% long position, and I'm going to go ahead and obey that since the market appears to be solidifying just a little bit. Limit order 1445, first cut loss level 1354, final cut loss level right there 1325. So some pretty tight stop levels. If the first one goes, more than likely the second one goes, but those are the only two to work with. I'm not working with any of these levels back here because there was too much red and yellow BOP there. So just those two levels for UMRX. Then DMLP, this one flagged in my price volume BOP surge scan. I looked it up. It has a 90 composite rating in IBD. It would be a canceling quality stock, but the EPS rating is currently under 70. I believe it's at 65 if I remember correctly. But the earnings and sales growth, don't quote me on it, but I believe in the most recent quarter, they're both up over 80%. So with the recent growth and with the earnings estimates in the future, this is a future canceling quality long stock. So since it's in my price volume BOP scan, and since it's a half canceling quality scan, I'm going to put 1.25% into it, not 1.5%, not just 1% for being price volume BOP and not quite being full canceling. So I'll meet it in the middle. 1.25% of my account capital, limit order 1845, first cut loss level 18, second cut loss level 1780, but I might use 1735, which is these lows here because it's pretty much splitting hairs with that low right there. Or you could use all three, all up to you. And then the last new long position, MYFW from my IPO scan. A lot of pocket pivot point signals lately. I see taller green volume bars with no big red volume selling. See open body bars and intraday hammer candles, reversal bars, wicks. See the green BOP. I figure even though it's a thin name, it's an IPO stock, good enough with that green BOP. So limit order 1775, 1% of my account capital. First cut loss level right there, 1688. Final cut loss level for now, 1599. Yeah, very limited risk. I just like the way it looks, but if it doesn't do much, I won't be surprised. And then the two ad signals, these are actually the best two highest quality signals clearly out there. Nano and RDWR. Nano and RDWR are both can slim quality. Nano is also, oops, not that one. Nano is also perfect speculator quality. So since it's an ad signal, it would normally be 1% and then 0.5%. If we had volume right now, I would do 1% for each scan. So instead of doing either 0.75% to 1%. Once again, meeting in the middle. 0.875% of my account capital, since it's an ad signal. If it's a new signal for you, you could do 1.75%. Limit order 41.62. First cut loss 39.78, or you could use 39.47 at splitting hairs. Final cut loss on the ad signal 38.24. And then RDWR, Cancelim Quality, was also my green bop for the past 20-day scan. So very, very nice. Once again, same situation. Could either be 0.75 or 1%. I'll meet it in the middle, 0.875%. 27.20 RDWR, limit order. First cut loss level 26.45. Then 25.87, and then 25.42. And if you're underinvested here, I mean, heck, if this was a good seasonality, uptrending on heavier volume, kind of more negative sentiment, and if this thing, let's say, had above average volume, was also in the perfect speculator scan, man, we can start looking to do that 2, 3, 4, 5% per long position on my end even. If we could just get a little bit more conviction behind the volume in the market and or move into positive seasonality. But for now, small measured trades, tight stops in stocks that at least offer 4-to-1 reward risk ratios. So remember, in all these signals that I'm getting, I'm expecting juicy gains. But it's all market dependent. The market doesn't move higher and it moves lower. 3 out of 4 stocks follow the market. The good news is tight, small losses on everything. 1,000 paper cuts could add up to a big cut, though, so hopefully we do resolve higher. All right, everyone. I'll see you in the chat room on Tuesday. Aloha.